Mortgage rates saw another big drop on Friday thanks to some promising news in the latest jobs report. I've been sharing that what I've been personally experiencing here in the market is that ever since the election passed, more and more people are stepping into the market both for buying and selling. And that is still holding true in my experience, and we're starting to see it in the data. Pending sales were up 13% from last year. The number of people applying for mortgages had another big increase after having a double-digit increase last week. Less homes are having price cuts this week, and pending sales are up 13% from last year, a time which historically should be the slowest season of the year. We'll be covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is December 9th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here. It'll take you to the latest weekly market update. First up is market news. Mortgage rates saw a big drop on Friday thanks to last week's BLS jobs report, which was just more evidence that the labor market is softening but not breaking. So straight from the report, total non-farm payroll increased by 227,000 jobs in November, and unemployment changed very little at 4.2%. And looking at this chart, you can see we're back to 4.2. For 2 months, we were at 4.1, and then right before that, we were at 4.2 as well. So very tiny changes happening here, and I'm sure you know this whole period and even before, these were historic low unemployment levels. So we do need unemployment to be going up so that the Fed can see the labor market is softening. We just don't need it to be going up crazy, which is exactly what's happening. It's slowly and steadily softening. Then we'll look at job openings and jobless claims, starting with total job openings. You can clearly see we had a slight increase last month, but this is very clearly still in a downtrend, which is what the Fed is looking for. This shows that hiring is also slowing down, but we're not seeing mass layoffs occurring either. So a nice, slow, steady cooling. That's what we need. Now looking at jobless claims, the headline number did increase up to 224,000, but in order to be in job loss recession territory, we would need to be well over 300,000 on a 4-week moving average. And as of now, the 4-week average is only 218,500. But more importantly, you can see that jobless claims were trending up through all this time, and you can see if I could draw a line through here, the trend has clearly broken down. So we're out of the uptrend. Now that doesn't mean we're automatically in a downtrend. It just means the uptrend is broken. Likely we'll go sideways for a while before a new trend emerges. It could be up or it could be down. But for now, the uptrend is broken and we're already nowhere near job loss recession territory. Once again, we're at 218,500 on the 4-week average, and we would need to be well over 300 for things to be breaking. And this report is likely going to be noisy due to the past hurricane activity as well as those strikes that were going on. So it's likely we are going to see some revisions to this number down the road. However, it's still on track with what we've been seeing really for the last 14 months, that labor is softening but not breaking. The only downside to this report was that wage growth is still hotter than the Fed would like it to be. It's at 4%, and they would like to see it at 3%. But other than that, this is good news. Then before we move on, last week, in case you missed it, I made a video showcasing a community in Anna, Texas with some pretty good deals here at the end of the year. You can get a giant 5-bedroom, 3,060 square foot home putting just 3.5% down, and your monthly payment is only going to be around $3,500 a month. And if you've never even heard of Anna, it's only like 15 minutes north of everything in McKinney. So if you're looking for an affordable and convenient house in the suburbs with low taxes, make sure and watch this video next. Okay, moving on, let's start with the national housing inventory. This week we had a decrease of 16,539 less homes for sale in the country. This drops us to 26% more inventory than we had last year. That's down from 27% the week before, to a total of 690,015 homes available for sale in the country. This same week last year, inventory was only at 546,424. So still much better this year, and nothing crazy is happening. Inventory is just declining seasonally at about the same pace as the last few years. Then for reference, the all-time inventory bottom of 22, we had 240,000 homes for sale. The peak of last year, we had 570,000 homes for sale. This same week in 2015, we had about 1.05 million homes for sale. So it clearly looks like mid-October was the inventory peak for the year, which means we are trending back towards a normal market, because last 2 years, The inventory peak was somewhere in November, and normal would be much earlier in the year, sometimes as early as June or July. Now looking at new listings, for whatever reason, and I'm sure it has to do with which day of the week they're reporting this data, but the huge decline that we should have seen last week, we didn't. So I thought that meant we didn't have it. No, it was actually just reported the following week. So what you see here, this is the Thanksgiving decline, but you can see it was not as big of a decline as either of the previous 2 years, which were down here. But Thanksgiving week, we still had 30,754 new listings. So our hope is that next week's data, we're going to jump right back up above 2022 and 23's numbers. So we'll see. But overall, you can see we have been trending above 2022 and 23's numbers since about September, which is great news because the more listings we get, the lower the chance prices are going to go through the roof again when rates finally do drop. Now looking at pending sales, 7 weeks ago, we finally broke out above that 2022 line. This week, we have 13% more homes pending than we did last year, which is a big jump from only 7% more last week. And you can see in the corresponding week, there was a huge drop, whereas here, we barely moved at all. So in a week where things should have gone straight down, they didn't. And that took us from 7% more homes pending to 13%. So you can see home sales are definitely growing. But overall, what would be normal is we should just be trending down. So if you see that next week and for the rest of the year, that would be totally normal and nothing to worry about. But so far, we're not really going down. We're going down at a much slower pace than we did the previous 2 years. This week, we have 315,566 homes pending in the country. Then the last thing we cover nationally is a percentage of homes having a price cut. Every year, it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a very small decrease this week to 38.6% of homes taking a price cut. But of course, what we're looking for here is the trend. And as you can see, since way back here, we've been trending sideways and down. Last year, we got as high as 39.2. The year before, we got as high as 43.2. And just so you know, if you want home prices to come down, this number would need to be trending up and not down. So this is just another way of demonstrating that housing prices are remaining very strong. Okay, moving on to mortgage rates. You can see we started the week up at a 6.86 and we ended, you can see this huge drop on Friday, that blue line going straight down. That was our big drop. It was a 0.16% drop in a single day down to 6.68%. And that, of course, was due to the jobs report that we got that we just covered. Now, the bigger news here is mortgage purchase applications. So last week we saw this big double-digit increase. This week we saw another 6% increase in the number of people applying for mortgages. As you can see by the previous two charts, it's not normal for things to be going straight up at this time. We should be going sideways and slightly up. Instead, we're going straight up the last 2 weeks. Now, keep in mind, all 3 of these years are record low demand years, so it doesn't take much to move the needle like this, but it's definitely a surprising gain, and it started, again, just a few weeks ago out of nowhere, as soon as the election finished. But myself and many agents I've spoken with, as well as new construction community salespeople I've been talking to, are all experiencing notable increases in the number of people reaching out both to buy and sell right now. But aside from that, I've been saying it all year and still believe it. There's no reason to believe mortgage demand is going to grow significantly with rates this high. Real demand comes in once rates get and stay below 6% for a sustained period of time. The evidence we have for this is new construction has been offering well below 6% rates for a very long time now, and they've been selling way more houses than the resale market. Okay, moving on to the local markets, starting with the MLS data of Dallas County. Last week we had 438 new listings. That's 158 more than last week. And just so you remember, last week what we were seeing was Thanksgiving week reflected. So you're going to see a big jump in these numbers. Basically, we went down last week for Thanksgiving and we're bouncing back to normal now. We had 274 closings. That's 61 more than last week. 44 of the homes that closed were immediate sales, meaning they contracted within the first week. That's 3 more than last week. 229 went under contract. That's 47 more than last week. In total, there are 1,936 homes either under contract or pending. That's 37 less than last week. Moving on to Collin County, we had 307 new listings. That's 137 more than last week. 223 closings. That's 13 more than last week. Of the homes closed, 27 were immediate sales, which is 28 less than last week. But that data, because it's related to closing, is from more than 30 days ago. 129 went under contract. That's 18 less than last week. And in total, there are 1,527 homes either under contract or pending in Collin County. That's 54 less than last week. Okay, let's move on to the Market Action Index. If you've never seen it, it just takes all of this data, puts it into one easy to read graphic with a number, All we use this for is to see, are things looking normal or is anything looking weird that we need to be concerned about? What would be normal for this time of the year is things should be cooling off, prices should be dropping, days on market should be going off, everyone should kind of be shutting down for the holidays. So that's what we're looking for here. Okay, starting with the market action index, it did not drop. It has been pretty flat for a while now, but overall you can see the trend since August has been down. The trend more recently has been flat. So to be more normal, this would still need to be trending down, but there's nothing concerning here because you can see we did have a downtrend. When we go up to median list price and price of new listings, now remember, when you see a big jump like this in the 1 week data, it's likely it's going to jump back up some next week. But overall, this would be normal if the price of new listings was trending down, which it hasn't been, really. That's what's been unusual. The most unusual thing we've been seeing is that prices have been holding really strong for the end of the year. So finally, we have a number in both categories that is the lowest it's been, whereas it's really been trending more sideways. We're all the way down to 410. Again, I think this is too sharp of a drop. Probably both of these are going to bounce up some last week, and we'll see. They could bounce right up back in and continue a sideways trend. We don't really rely on 1 week data. And truly, there's not much time left for prices to continue dropping. So pricing is looking normal. Days on market increasing, that's normal. Median days had a jump last week up to 70, so that's going to be holding there for a while, but average is climbing, that's normal. Number of homes having price decreases has been pretty much flat, just straight sideways. Again, more normal would be if that number was actually increasing, but none of this is concerning. Inventory is dropping pretty quickly though. We still have plenty of inventory, but pretty big drop the last couple of weeks. So Dallas is still a 36, which is a slight seller's advantage. If I didn't say it, a 30 or below is a buyer's market. Anything above a 30, we're asking how much of a seller's market are we in? So things are cooling off, not as fast as they normally do. Prices have been holding stronger than usual. That's the only weird thing. Moving on to Collin County. Collin County, pretty similar story. Prices have been holding pretty strong for a while now. Same as median price of new listings, a very, very slow trend down. This is the lowest number we've seen, but not by much. And again, it could come back next week. But even if it is trending down, that is normal. That's what should be happening. Average days on market climbing as well. Had a 3-day increase last week. Median days on market 70, same as Dallas. Number of homes having price decreases has been in a downtrend for a while, which again, this is just another indicator that prices are holding steady. Their inventory saw a huge drop last week, almost 200 homes. But inventory dropping at the end of the year is normal. We just have to see, is it going down faster than normal? This week it is, but we don't rely on 1 week data. So actually both Dallas and Collin County had a pretty sharp drop in inventory this week. So that's something worth watching. And their market action index has just been holding steady pretty much at 35. So same as Dallas County, things are cooling off, just not as much as usual. Nothing to be concerned about here. Then looking at the pending sales, unusual is that Dallas County actually saw an increase in pending sales, this black line up at the top, whereas you can see the previous 2 years, we saw a big drop that week. So that actually is unusual for Dallas County. And this black line being so much above the other two just shows you visually how much sales are growing here in Dallas County. Then looking at Collin County, their black line is way above because they have a lot more new construction and they're growing a lot faster. Dallas County is not growing as fast because we're already pretty full, whereas Collin County, they still have tons of room to expand, and that's what's happening. But Collin County the last 2 weeks has seen less and less pending sales. That's more normal as to what should be happening. Now we're moving on to our top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that market action index number. Remember, 30 or below is a buyer's market. So we're starting with the absolute hottest cities. Carrollton, Texas remains number 1. It's at a 44.14. Coppell remains in the number 2 spot. Richardson heats up 1 spot. Grand Prairie cools off 1. Seagoville jumps onto the list out of nowhere at number 5. Princeton heats up 2. Louisville remains at number 7. Plano heats up 2. Irving remains at number 9. And Lancaster jumps onto the list at number 10. So Balch Springs went from number 5 and fell off the list. Saxe, which was number 6 last week, fell entirely off the list. And I just want you to see, to go from number 5 to fall off the list, we're talking about going from a 40 to a less than a 38.5. It's not a huge cooling off. Could just be for 1 week. It doesn't take much to move up. Look, 0.86 to 0.88. That's all it would take for these two to trade places. So a very tight race in a lot of these cities. Then we like to zoom into specific zip codes. The absolute hottest is Hutchins 75141, followed by Dallas 75244, Carrollton 75010, Carrollton 75007, Plano 75093, Irving 75060, Grand Prairie 75051, Grand Prairie 75052, Richardson 75081, and Coppell 75019. Then moving on to the coolest cities and zip codes, the absolute coolest remains Blue Ridge, Texas at a 24.91, and actually only the bottom 3 are buyer's markets. We've been as high as 5 being buyer's markets. But Blue Ridge, Sunnyvale, Leonard, Anna, and Van Alstyne, all of these remained in their spots from last week. Rockwall cools off 2, Lavon remains, Salina heats up 2, Prosper cools off 1, and Red Oak heats up to the hottest city on the coolest cities list. So not a lot of changes on the coolest cities. Moving on to zip codes, the absolute coolest remains Blue Ridge 75424, followed by Dallas 75219, Sunnyvale 75182, Leonard 75452, Wilmer 75172, Rockwall 75032, and all of those are buyers markets. After that is Anna 75409, Dallas 75233, Van Alstyne 75495, and Lavon 75166. As always, if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, I would love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.